Mehta, member of BSE and NSE, who now joins in. Dipan, hi, good morning. Quite a bit of renewed interest in a lot of power stocks led by NTPC this month. What do you make of that, and do you think it's a rally which will sustain?
Well, the latter half is a bit difficult to explain whether the rally will sustain or not. But I think since that major reform, that Uday program was announced by the government, and I understand it's getting good response from the state governments as well. Since then, I think the prospects for the power industry certainly have looked up, and that's keeping investors increased interest in the sector as a whole. But end of the day, I think, it's never really created value for shareholders and minority shareholders. It's a capital intensive business and many more challenges in terms of, selling power at the right price and getting price increases because it's highly regulated. So there are many challenges for the industry per se, and the uptick which we are seeing in the power stocks at this point of time, in fact, would be a good opportunity for investors to lighten up their holdings in the power sector. And within the power sector, I think the best segment to play would be the renewables over there, and the companies engaged in setting up renewable projects.
Okay. Dipan, hi, good to see you in this afternoon. If you look at the year-to-date gainers on the Nifty, first is BPCL up 40%, Maruti following that up around 38%, and Lupin up 29%, and all of them respectively from different sectors. So if you had to pick and choose between any three of them to give the maximum amount of returns in 2016, which one would it be?
I think it's a bit difficult to answer, but nothing really changes from 2015 to 2016. We are still stuck in slow growth mode. Earnings are not picking up, and there are many challenges as far as the overall economic growth is concerned and the sectors which are sensitive to overall GDP improvement. So keeping that in mind, I think the best sectors which will continue to do well are once done in 2015, that being pharma, to an extent mid-cap IT, and again private sector banks, private sector NBFCs, which are continuously gaining market share at the expense of public sector organizations. I think those three broad investment themes will continue into 2016, and my guess is that the winners of 2016 also be similar to the winners which we have seen in 2015.
Okay. Dipan, the wealth has been destroyed by PSU banks this year, notably by PNB. At current levels, though, would you want to invest some part of your money into some of these PSU banks, especially the index funds?
Oh, not at all. I mean, still a lot of challenges remain for the PSU banks. The balance sheet cleanup process is not complete, and in fact, that's one of the big risks for the economy, because RBI is trying to get the banks to acknowledge their NPAs and do something about it, either write them off or take over managements, and there are various proposals in place to try and deal with the NPA problem in the banking industry per se. And as and when those steps are taken by the RBI or the banks themselves, that will be negative for PSU banks. In my opinion, I think PSU banks still have some more pain to go through, and there are issues not only in terms of whatever NPAs they have already recognized, but whatever is being shown in the balance sheet as good assets. There could be a few negative surprises over there as well. So in such a scenario, optically these stocks look cheap, but then the quality of the balance sheet and the earnings growth, which is likely to be very, very low, should keep investors cautious about the sector as a whole. And when you have a choice of so many dynamic and fast growing private sector banks and NBFCs, there is really no need to gain exposure to the finance sector or the banking finance sector through the PSU banks.
Okay, would you share that view about the likes of Axis and ICICI Bank in 2016 as well?
Maybe those could be the turnaround in 2016 as far as the private sector banks are concerned, and there is scope for the price earning multiple of the price to book to look up or be re-rated on the higher side for both these banks. But I think we need to watch out for a couple of more quarters of numbers coming through. Both are struggling with some amount of NPA issues and not completely satisfied with the kind of growth rates that they have generated. I think there is a mild slowdown over there. They have been growing in the past at a much faster pace. So I think if these two concerns are addressed by these banks, then I think that ICICI Bank and Axis Bank could deliver returns which are higher than their peer group. Having said that, in Axis Bank, we and our clients are invested.
Okay, the market slipped a bit into the red for the Nifty, down about 3 points right now. Sensex still holding in the green, and the Bank Nifty is also down a bit. Uh, Deepan, what about some of these defense names? We've seen a lot of action in names like Pipavav, uh, BEL, BML, and a couple of other names as well. Anything that stands out for you?
See, I think that's a very strong message coming from the government that they want to indigenize defense production. But my sense to play this particular theme would be to go through the PSUs. I think Bharat Electric, BML clearly get the preference when it comes to price, when it comes to getting the orders, and to an extent, I think company like BL has delivered in terms of past track record, asset-light business model, preferences for several government contacts, decent. Assets in terms of technology and patents and connections as well as partnerships. So I think the entire defense indigenization or make in India as far as defense is concerned may play out better as far as the PSUs are concerned than the private sector players are concerned. There are a lot of issues and challenges over there. And I would think that both BEL as first choice and BML as second choice also could turn out to be good investments for investors. Having said that, BEL is a company in which we have invested as a measure of disclosure.
Okay. Maybe insurance might be a theme that could be something that we could see more formidably of in 2016. And I talk about it because we had that FIPB meet where the HDFC Standard Life insurance deal might be taken up. And hence, eventually, the management would look at an IPO as well. Your sense, Dipan, in terms of how interested you would be in the insurance space?
See, I think this relaxation of foreign investor norms in insurance, that particular story is over and done with. I think whatever relaxation had to take place has taken place. The foreign players have increased or are going to increase their holding over there. And now as investors, we are getting focused on what the earnings capacity of the industries and what earnings growth they can generate. And frankly, past 2-3 years, the industry really hasn't, delivered in terms of top line, bottom line. And still LIC remains the major player over there, and really the private sector insurance companies have not been able to make as much headway as one thought they would. And keeping that in mind, I think I'm not that positive or bullish on the insurance companies. The stocks of the insurance companies, let's say like Max or Bajaj Finserv, clearly haven't delivered in terms of returns to shareholders. And going forward also, one doesn't see that typical 15-20% kind of secular growth coming through for the insurance businesses. So I would like to, remain underweight in the insurance sector. And when you have to allocate some money for the banking and financial services sector, the best is to go for consumer finance, microfinance, private sector banks which are focused totally on the consumer lending side. And which have a large retail network, and then you could have some new generation banks or which may get listed in 2016 because of the new licenses which have been given by RBI.
Deepan, one of the stories of 2015 was the revival of aviation. I mean, 2 years back we didn't talk about it, but now we have two large companies in Indigo and Jet Airways, and we have a SpiceJet as well, which has also seen quite a bit of recovery. In fact, has been one of the best performing stocks. But after the rally, do you think these stocks are priced to perfection, or do you think if crude stays where it is, there's further round of re-rating left in these stocks?
First, a disclosure that we and our clients are invested in both Jet as well as Indigo. And my sense is that at least for the first half of 2016, aviation will remain in focus and will be a lot of interest to investors. It's not just that the crude oil prices are benefiting these airline companies. There's real growth as far as passenger traffic is concerned. And if you watch the monthly numbers, they are solidly in the high teens. In some months, it has crossed 20% also. And with this kind of a growth rate coming through, it's kind of a perfect scenario for the aviation sector, where you have top line growing because of more and more passenger flow that leads to better utilization of assets, and costs are kept under check because of lower crude oil prices, which is the biggest cost element. So I think that notwithstanding the past absolutely dismal track record of these companies, something has changed for the aviation for the better, and I think for the long term as well, because even if the oil price were to go back to $40 or $50, these companies would be in a position to easily pass on the cost increases, and underlying there is very decent volume growth. A lot of the airline companies will also benefit from the international operations which are yet to pick up, and there's some traction waiting over there as well. So that's one sector, which we are quite optimistic and positive on, and I think investors could gradually increase their exposure over there.
Okay, Dipan, we're going to leave it on that note. Thanks very much for joining in and talking to us. So that's Dipan Mehta talking about the fundamentals of the market. Let's shift focus to one company which is in focus because it's been a clear